Everyone wants to be a millionaire. It's not easy. It takes time. It doesn't happen overnight, guys. Slow and easy wins the race. The best way I found to become a millionaire is investing in the stock market. Now, the next question is, what are we going to invest in? The easiest way I've found to invest is EFTs and mutual funds. They are run by professionals and invest in many different companies. This means they are diversified. You got to start investing now and you got to start investing early. I'm going to show you what $1,000 initial investment in a good fund and a monthly contribution of $800, where it's going to take you in the future. I'm going to show you how easy it is to become a millionaire. Anyone can do it using this compound interest calculator. You guys could find this calculator at investor.gov. You could change the numbers to whatever suits you guys. But the way I started this, the initial investment was $1,000. Monthly contributions, I put $800, which works out to $200 a week. Length in time, 30 years. The interest rate, 8.54. You're going to see later on why I'm using this number. And the rate of variance, so in other words, 2% higher, 2% lower, and it compounds annually. In 30 years, you're going to have over $1 million, $1.2 million, if you just follow this investing pattern. And as you could see, 2% above brings you to 10.54%, and that'll get you almost $1.8 million. And if it's 2% less, you're gonna be in the range of about 800,000, which is not too shabby, guys. As we shoot over to the next example, this example, same deal. You start with $1,000, 200 a week, which works out to 800 monthly, 30 years. The interest rate is 13.4. The variance is 2 years, and it's compounded annually, almost $3 million. Is that unbelievable, guys? And now if we look at the interest rate deviation at 15%, which is really high, but you're looking at $4 million, 4.3. And if you're on the low side, which is 11%, you're still looking at like $1.7 million. Not too shabby, guys. My two favorite funds to invest in order to become a millionaire are Schwab's S&P 500 Index, SWPPX, and Schwab's U.S. Dividend Equity EFT, SCHD, the famous SCHD. I'm going to dig into them a little and tell you a little bit about them. We'll start off with the S&P 500 Index Fund. It invests to track the total return of the S&P 500 Index Fund. It invests 80% of its net assets in these stocks. Now we're going to shoot over to SCHD. What's that about? The investment seeks to track closely as possible before fees and expenses the total return of the Dow Jones U.S. Dividend 100 Index. The fund invests in stocks that are included in the index. Basically, we're looking for good companies that pay high dividends, which is great, and increase their dividends. So now we're going to shoot over to the expense ratio. The S&P 500 is super cheap, just charges 0.02%. And the SCHD charges 0.06. Not too bad, guys. And we go into the quotes. The S&P 500 was trading at $68.17. That's close of business 9/21. And SCHD was trading at 71.43. Now the fun part, the dividend yields 1.41 for the S&P 500 fund. It pays annually. SCHD, since it's a dividend fund, pays quarterly, and it's 3.49%. And to invest in these funds, you could invest $1 into the S&P 500 fund, since it's a mutual fund. SCHD, you have to buy at least one share. There's no fractional shares. If you're enjoying this video, please hit that subscribe button and give it a thumbs up, guys. It'll really help this channel. Now, as we go into the Morningstar ratings on these funds, they're both rated very high, top of the line, 5 stars, guys, out of 1,277 funds for the S&P 500 index, and out of 1,141 funds for SCHD. The historic return is above average for the S&P 500 and extremely high here for SCHD. The risk for the S&P 500 fund is average, and for SCHD is below average. Before you invest in anything, do your research and talk with your financial planner. I am not a financial planner. All this information is right off the Charles Schwab website. You could use any broker and use their research tools to come to these figures. As I look at the 10-year growth of SCHD and the S&P 500 fund, the S&P 500 fund beats it out. An investment of $10,000 will get you close to $11,600. An investment of $10,000 in CHD will get you to $10,000, almost $10,700. As we shoot over to the next slide, it shows the performance here since its inception. 8.54 for the Schwab S&P 500 fund and 13.04 for SCHD. I hope those numbers ring a bell. Those were the numbers I used in the compound interest calculator. So it shows you after 30 years, if you invest consistently $800 a month, you're going to be millionaires, and in some cases multi-millionaires. Let's take a quick look and see what these funds are composed of. The S&P 500 has 503 companies. The SCHD has 104 companies. So you see the diversification. They're mostly all in stocks, as you can see. And now the top 10 holdings, you could go down the list here and take a look at them. And they also give you the sector breakdowns. So you see all the diversification. So you're not just invested in a few companies. You're invested in a bunch of companies. And you can see that they're mostly giant and large cap companies. And it shows you the regional exposure in the top 5 countries. Remember, guys, the younger you start, the more money you're going to have. I'm going to leave a link to my Super Saver video. This way it gives you some tips on how to save more and reduce expenses. This way you can invest more. Good luck, guys, and thanks for watching.